Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets and the news that moves the markets. And before we jump into things this week, Rob, let's take a quick look at what the markets have done. Across the board, we're looking at primarily increasing prices in the major metals indicators that we look at, with gold up about 2.25%. $60 rise here this week, and flirting back with those all-time highs again at 26.85 that we're going to talk about here in a moment. Silver not to be outdone. In fact, as per usual, silver up about 4%. $1.25, and still lagging behind gold as a whole in the market, but having a pretty strong week here this week. Platinum even a little bit better, up 4.5%, around $42, and palladium fixing that ratio between platinum and palladium just a little bit. Palladium down actually about 5% from the high. It's down about 3% on the week, but 5% from the interweek high, about $60. The S&P, the stock market, trailing its way up about 1% this week, and the dollar's up about 0.5% this week. So maybe a return to just the good times continue, Rob. Everything's going up all at once. Everything everywhere all at once is going up except palladium. So everything's fixed, right?
Right. Well, I mean, we're a weekly show. People watch it every day. And they've got to be asking themselves, hey, okay, we've hit 26.85 twice now in the last few weeks. And then like we were mentioning earlier, it did back up to just above 2600. But we've also been skipping along this mid-range in the 2660s, 2665 range. What is this signaling? Is that 2600 move backward? Is that our pullback? It's not even at a Fibonacci level, I don't think. And have we seen this pattern repeated so far this year? I know that we have. Does this mean we're going higher? What do the charts indicate?
Really only in the shortest of time frames have we had anything that resembles a pullback. So you'd kind of have to go, we're talking really since like September, right? Since the breakout move in September where we jump back up to the next level. And then sure, we've had a 50% retracement, but we're talking about a month's worth of numbers. Who cares?
Yeah.
So what it makes me want to do, it makes me want to maybe scoot the chart back a little bit and say, okay, well, are we seeing some kind of pattern here? Because what I don't want to do is get to the point where I'm making suggestions on where I think, or estimations on where I think gold may go here going forward without something that gives us a little bit of repetition or track record, or at least hints in a direction one way or the other. So sure, there's a couple different things gold can do, or really any market can do when it hits a previous level. Why gold stopped at 26.85 to begin with, I don't think there's any reason for it to do so. I think it just happened to run out of gas on September 26th, and that was the price it happened to be at.
Yeah, it kind of ran out of gas again this morning because we were there this morning.
And sure, you know, there may have been some short-term profit seekers that are willing to place some positions here over the last week or two. Just, yeah, you know, I bought at 2,600, I bought at 2,620. I'll take profit at 2,680 in case it gets back up to that high again, which it's done. But you're not looking at significant quantities of standing orders that have been sitting there for like months.
Right.
This isn't a number that really matters in the long term. So for me, it just kind of becomes, okay, well, what is the general consensus of the market and how's it been reacting to these types of things thus far? So I would say, all right, well, let's just look back in August, you know, because that was the last time we put in some new highs when gold finally broke that ceiling and jumped up to 25.25. Well, it sat between 25.25 and 24.75, so it had about a $50 trading range, and it sat there through the end of August into September before we had another breakout. So there are situations where you have like two steps forward and then a pause.
Right. Now go back to February. The February chart is very similar to what we're seeing right now.
Yeah, you go back to February earlier this year, and you know that's just a much bigger example of the same thing.
Yeah.
Where you have the big run up from February until about April. you had a much shallower percentage decline from peaking out at around 24.30, coming back down to around 22.80. Larger dollar amount, but we're talking about gold starting back at like sub 2000, so it was a much bigger run up. But same thing, exactly like you're pointing out. You had this big run up and then a sideways pattern. Well, then we had another run up, a smaller, more measured version of it, but another run up and then a sideways pattern, another run up and a sideways pattern. So one option is we just continue this stair step pattern up.
Yeah.
There's no reason that can't happen, that we don't have a pullback. Well, what if we have a pullback? What could that possibly look like? Short term, you're talking just this run up since August, where we started here at 2390. You'll see on the chart up to where we're at now. You're looking pullback somewhere in the, let's say, 2500 range. 2500 seems like a perfectly reasonable place to come back. Okay, stretch that back a little bit further.
Right.
Let's say we go all the way back to, like you mentioned, that breakout move that started in February and really took off. Now you're talking gold in the 2300 range, but still significantly bullish at that point. So there's some good arguments to be made here for a pullback.
Well, we've never been here before.
Yeah, we've never been here before.
It's the high water mark, and you have a lot of clients that are waiting for an opportunity to buy. And I think the question really becomes, are they going to be given that? And I don't know if the fundamentals of this market, when you look at the geopolitical situation, you look at the political situation, which we talked about last week, doesn't really seem to make a difference on the price of gold. Maybe a little bit, depending on who gets in for a little while, but over time, pretty much the same. So, looking ahead and say, well, what is the outlook for the dollar? What about the debt? What about the budget? Who is going to fix this? I don't know if anybody really is. So I would tend to err on the side of a stair step higher, a continuation of the stair step like we've been seeing. But you have to recognize that the inevitability of a pullback will happen. Does that happen at 2,750? Does that happen at 3,000? We start getting to some of these higher numbers, the likelihood of a consolidation really starts emerging. We could actually see it from here, but I just would encourage our listeners to adapt a stance of, well, the charts can take me any way I want to go. We can stay where we are and move sideways. We can move higher, or we could have a correction. The only way to win is to accumulate ounces, where you take 2 or 5% of what you're going to spend and just call your advisor every other week and just buy instead of waiting for the magic moment. What do you think?
No, I think that's a great point. Here's a couple weeks where we've spent some time looking at charts and getting ready for the show. I know Tori did a ton of work going back through history and looking at really just even in multiple different time frames, how does gold respond to the biggest political event every 4 years, the changing of the guard in the United States. And we're all sitting around, hey, if my guy or my girl will just get elected, or if this, and what did Tory end up finding? Ain't a lick of difference between the two. You have inflation increasing at the same exponential rate over time, irrelevant, and you have the average rise in gold almost identical, less than a percentage point difference when you look at it year to year. So there's no difference whatsoever. Then you've got me this following week sitting here looking at gold double topping all-time highs here going, well, is it a double top? I don't know. We've never been here before. So is it a continuation? No clue. Are we going to get a reversal? Couldn't care less. It's like, I don't know. Tori doesn't know what's going to happen in the politics, and I have no clue what's going to happen in the charts. And here's the thing. That's almost always true. So here's the little known secret is most of us are just taking the information and we're trying to make the best guess we can. Richard Russell used to always say, I only need to be right 51% of the time. And I think that's an important thing. You're right 51% of the time. You're a quadrillionaire.
Yeah.
You've done better than everyone else in history. So I think you're right, Rob. I think this is where Tori and my youthful exuberance, being 20-year residents of the precious metals market. I think we need to take a backseat to your more than 20-year expertise in the precious metals markets, because I think you're correct. I think there's something to be said for waiting for that perfect storm to tell you that, man, look how smart you were. You
Yeah.
picked the right time and the right price.
Yeah.
Just somewhere in between that greed, and then on the flip side, the idea of I'm scared. Somewhere in between the fear and the greed is a tiny little sliver of just reason.
Yeah.
And Rob, I've always appreciated that you try to live in that tiny sliver of reason. So I think you're right. I think it's consistency here going forward.
Got
We're in
to.
uncharted territory in the precious metals. If you want to leave a little couch cushion money on the side for a pullback, go for it. I am too. But I'm still buying every 2 weeks in my vaulted account. And
Yeah,
I
me
think
too.
that's the plan going forward in perpetuity.
That's how you eat an elephant, my friend, one bite at a time.
So with our ever-present failure in providing perfect magic 8-ball and magic 8-ball answers as to the
Kreskin
direction
says,
of gold.
yeah.
Yeah, and sitting here watching what could end up being a beautiful double top in the gold price right before it breaks back down into phenomenal entry point territory, or just parks here for the next 6 months. We don't know which. We do hope that some of this information helps you sort of take a step backwards, not necessarily find the exact right answer, but just take a moment to tell yourself, hey, let's calm down and let's just make some reasoned investment decisions going forward in a frankly otherwise relatively tumultuous political, economic, and geopolitical climate right now. There's enough problems in the world out there. Pinpointing the perfect gold entry doesn't have to be one of them. So, as always, we appreciate you stopping by each week for Golden Rule Radio. If you'd like to discuss your personal portfolio with one of the advisors here at McIlvaney Precious Metals, we're always available to talk with you. If you're not already a client of ours, give us a buzz. We're happy to chat with what you've already been doing and see if there's any additional expertise we can help you along the way with your metals portfolio. So thank you again, as always. If you liked what you heard, you can hit the subscribe button and ring the bell. You can find us also on Twitter at ICA Gold or Facebook at McIlvaney Financial. Our website is McIlvaney.com. And if you'd like to speak with that advisor, the phone number is 800-525-9556. Thanks again, as always. We hope you have a great week.